Much for staying with us on Global Dialogues. I've been speaking with Jose Vinals, Chairman of Standard Chartered Bank Group, and of course, an extremely well-known economist, both at the IMF, at the Bank of Spain, and for his knowledge of global economics. Well, Dr. Vinals, thank you very much for your patience. Well, how would you look at smart money moving? Do you think smart money or funds, big funds, will be willing to come to Asian countries like India or Indonesia, despite there being a risk-off in global markets, in developed markets?
Well, I think so, and we're already seeing this. After a first half of the year where we had significant outflows in terms of portfolio funds from India, we have had 6 billion of inflows in the month of August. And that is something which reflects very well on the understanding that investors have about the future prospects of India. As I was saying 1 moment ago, Indian growth prospects are excellent, 7%, I think 7% or around that this fiscal year, and for 24 fiscal years, some moderation to 5.5% or so. And what we're seeing is that the actions that have been put in place by the government over the last few years in order to increase the ease of doing business, in order to improve infrastructures, in order to, the bankruptcy law, the cleanup of the banking system, all of those things have contributed, together with the significant sort of improvement of infrastructures, all of those reforms have contributed to reinforce the confidence of international and domestic investors, and the incentives that have been applied in India to bring in sort of investment to strengthen manufacturing, I think, are very, very potent. So all in all, I see that international money will continue to look very favorably to India and other Asian markets like the one you mentioned.
Okay, but I do want your thoughts on how global trade and global economy itself will evolve. I don't know if you saw the recent paper by the Credit Suisse strategist Zoltan Pozsar. He very strongly argues that from 1990 up until perhaps 2015, we had a period when the great powers trusted each other, and therefore there was distribution of production manufacturing centers. We saw inflation coming down. But now there is distrust. It is friend-shoring or, near-shoring or on-shoring of manufacturing. When there is so much distrust, the cost of manufacturing, he argues, is bound to go up because you're not seeking out the cheapest destinations. So he's arguing for a decade of inflation. Is that sounding convincing?
Well, I think this is a very complicated problem, and I think it goes beyond that in some directions. I'll try to explain that very briefly. The first has to do with globalization, the fate of globalization. And while I don't think that we're going to go in a deglobalization mode, I think that there are some sort of risks regarding fragmentation, some of which have already materialized, for example, in the technology space. So I think that that is going to create an environment which is different from the one we had in previous decades, which contributed to disinflationary forces and to growth forces in the global economy. So I think that insofar as there is some fragmentation, there is going to be more sort of an inflationary bias and a negative growth bias. So that's number one. Second, we have demographics. And there is the aging of populations in many important parts of the world, certainly in the West, certainly in important parts of Asia. That is going to lead to effects which may go both ways. As there is less supply of working age population, this is likely to lead to higher wages. On the other hand, as people get older, they're likely to become more conservative and vote for more conservative monetary and fiscal policies, which tend to tame inflation. So you're going to see forces moving in both directions. And number three, I think we have the digital revolution, and that is something which is going to put some disinflationary pressures,
hopefully,
and also provide some scope for productivity growth. So I think that the picture is slightly mixed. But if you feel that globalization may be the most important of these forces, then you would think that the disinflationary forces that we have had over the last few decades may not be there in the future, and therefore this is going to be more of a challenging environment for central banks, whose mandate is to contribute to price stability and keeping inflation low.
Yes, we live in interesting times. Well, I didn't bring forth a very important issue, climate. And now we're all into sustainable financing. The Indian government is thinking of sovereign green bonds. What are your thoughts? Will we be able to strike a whole new area of sovereign bonds? Are they likely to be having higher yields or lower yields? How do you see this entire issue of sustainable financing?
Yeah, I think sustainable finance is extraordinarily important for the world, and particularly for emerging markets and developing economies, because this is where the impact of climate change is going to be felt the most. Yes. And this is where most investment is needed, and therefore more financing. And certainly we have produced a report called Just in Time, where we look at the financing needs of 8 top emerging markets in the world. And we judge that those emerging markets would need about $100 trillion of financing between now, sustainable financing between now and the end of 2060 in order to meet net zero commitments, okay? That's about the size of global GDP. But, emerging markets and developing economies don't have that money on their own. So there needs to be a contribution from the private sector, and there needs to be international capital flows moving from developed markets into emerging markets and developing economies. And Standard Chartered, as a global bank, acts as a bridge for that. And we are sitting in many places, like London, like New York, like Singapore and Hong Kong, where the money is. And we need to make sure that money flows from international financial centers to the countries that need it the most. So this is incredibly important. And I think that the role that the private sector can play in financing sustainability is absolutely of the essence. Because if that happens, then emerging markets and developing economies will be able to experience both the net zero transition to net zero and positive impact on economic growth. While if emerging and developing countries are left to themselves, they will be unable to cope with, with both net zero and the requirements of continuing to grow and develop.
But do you see so much, realization of the need for this transfer of resources? Because, it was such a felt need that created the WTO and deglobalization. But now, with the first whiff of war, the green goals have been pulled back because, the Ukraine war created energy crises in every country. Yeah. So do you think the world is sufficiently committed to pursue green goals and sustainable financing?
I think that even more than before, because the awareness now is, for example, that fighting climate change and getting energy security go hand in hand. So people have seen new dimensions. And in the West, for example, in Europe in particular, the commitment towards a sustainable source of energy, green renewables, is become even more important. So I think that's moving in the right direction. The United States, I see it's a little bit more complicated. It's perhaps not moving so strongly, but certainly I can see that in Europe. And, going around our markets, I can still see tremendous determination on the part of many governments to continue with their plans for transition and to work hand in hand with the private sector, international banks like us, in order to make sure we can make that process happen.
Okay. Well, I have another unrelated question, but something which you, with your experience in IMF, will perhaps be better placed to speak on. Do you think there will be a lot of non-dollar bilateral settlement of trades? We are talking about Singapore's Pay Now getting integrated with India's UPI and some transfer of payments. At least India is working towards it. This is at a very retail level. But do you think for maybe digital reasons and for other reasons, it is possible that we will have bilateral settlement of trade in non-dollar currencies. Probably also because, Russia's reserves were taken away for a whole host of reasons, and the development of digital currencies.
Well, I think that the development of digital currencies, and particularly of central bank digital currencies, may be a new ball game, and that may contribute to more diversification in the sort of settlement currencies. But in the traditional analog world, although I see a scope for some of that happening, I would think that the dollar would continue having an extraordinarily large presence on those settlements, cross-border settlements. So these things, as we know, only change at very slow pace. So, in terms of the international preeminence of the dollar, I think that it would be there for a long time, although I can see the world moving, especially in digital space, towards a more multipolar sort of currency composition than what we're actually seeing in the analog world.
In the near term, we exaggerate the change, but maybe in the long term, it will change the way we transact. Yes, can't take away your eye from the dollar at the moment. The index is at 110, so really at its strongest. Well, just a final question. How confident are you of global economic growth and global trade? We saw the best years for global trade in the 90s and in the first decade of this millennium. Do you think the best is past?
Well, it's up to us, okay? It's up to governments and it's up to the private sector. And one thing which is important is that although a lot of discussion centers around trade and the implosion of trade, etc., I will make the point that trade nowadays is still stronger than pre-pandemic. Okay, so I think that is important. And second, that yes, we're having some moderation of global trade growth, and the slowdown in manufacturing growth will tell us that this is going to last for quite a number of months still. But over the medium term, again, studies that we have made at Standard Chartered suggest that global trade is likely to continue expanding over the medium term at significant pace.
Thank you very much, Dr. Vinals. It was a pleasure trying to understand the global economy from your point of view. So whether it is China +1, or whether it is avoiding a recession through a soft landing, or avoiding the worst of climate change, the future really is in our hands. That's his message. Thank you very much for watching this edition of Global Dialogues.